Hi there, welcome to Neppy Invest. Today, part 2 of the 15 ASX stocks I'll be watching very closely this October 2020. And the reason I've picked these 15 ASX stocks is because this is quarterly reporting season. So mostly small cap companies who are generally not profitable have to report their quarterly cash flow to show the investing community or the ASX how they're doing with their business. So they have to do this 4 times a year, and one of those months is October. So those quarterly cash flow reports will start to come in a trickle in the next few weeks, then they'll come in a flood towards the end of the month, and they all have to be in by 1st of November at 10 a.m. So most of them will come in the last day of October, and just an exciting time of year for me. This is one of my favorite months. So those 3 companies I'll be looking at this in this part 2 of this series is these 3 companies: Eccentric, Connection, and Spector. So different takes on these 3 companies. One of these companies, something's happening in this company I just don't understand. And the other 2 companies, nothing much is happening to these companies, but they're getting close to an inflection point, and that's when things can get very, very exciting. So that first company I'm going to be looking at is Eccentric. And this is the company, I'm not sure what is happening to this company at all. So Eccentric, the ticker code is ICU. Now, they're going to be changing that name of the company and the ticker code closely or soon, because they've just been approved by shareholders to change it. So they're into the provision of software, mobile telecommunications and technology business in the Asia Pacific market. That's all I know. I haven't researched this company at all. I've been closely following this company for now 6 years because I've been monitoring their cash flow, the cash receipts, and at the moment you can just see their cash receipts aren't doing anything. So the main thing I monitor in the cash flow report is the cash receipts, and to see if there's any growth in that. If there's no growth in that, I don't have to do any follow-up in the business, because what's one of the things is a main thing I look for in a company is growing cash receipts. So this company's just been doing nothing. That's on the bottom left there, that table there, or the graph, just doing nothing. So there's no reason for me to follow this company. I'll show you in a moment why I'm watching this company closely. But market cap of 28 million, share price 12.5, revenue 6.5. Nothing exciting whatsoever in those numbers at all. So all this on this page, nothing exciting there at all. But when we get to the next page, this is why I'm watching this company very closely. Since the start of June, they've gone from a share price of 0.8 cents all the way up to a high of 18 cents. Now, if you were a shareholder, an unlucky shareholder, because I'll show you the long-term chart, you could have made a fair bit of money back. So you could have made, almost 20, over 20 times 0.8 cents if you just held on and be patient. We've seen a massive uptrend in volume too, a spike in volume, and that's usually fairly bullish. So it's just seeming like the market's aware of something that I'm not, and even the management of the company's not, because on the top left hand there, I've got a quote from the annual report which was released recently, and it just says there they've had a difficult year. They're experiencing declining revenues in Indonesia and Malaysia, and COVID-19's exacerbated those declining revenues. So even management is bearish. So the market is seeing something that the management can't see, I can't see, and that doesn't mean the management's wrong, or even doesn't mean the market's wrong. I definitely could be wrong. Don't have the hubris to think I'm always going to be right, but I can't see it, and that's why I'm interested in see if the market is right. How did they pick up on this? What sign was there? That sort of thing. So that's the main reason I'm interested in this company, is to grow from it, to learn, and to see or find out how I missed something. So that's the main interest in this company. They have 3 different divisions there: enterprise mobility, digital media, and digital gaming. It looks like the most cash flow, $75,000, was in digital media, and the most receipts is in enterprise mobility. That's all I know about this company. So the next chart is just the long-term, or the next slide has the long-term graph in it, going back to end of 2015. So if you bought back then 20 cents, you would have lost a lot of money by the low of 0.8, but then you would have made some of that back in this real exponential growth in share price the last few months. So typically share price goes down much quicker than it goes up, unless that's because fear is a much greater emotion than greed. That's why share prices typically go up slower. But in this end of the market, sometimes it's the complete opposite. Sometimes share prices go up much quicker than the decreases, and this is the case of that. And that's because greed at this end of the market is much more powerful. People think, oh, they can make a lot of money if they get into the next hot thing. And on the top right there, I just mentioned they've announced that they are changing the name to IOUPay, and I think the ticker code is IOU. The share price increase could be something as simple as them changing the name to IOUPay, and the market sees the changing name to IOUPay. It's got the word pay in it. Oh my God, I'm going to have to buy it. This could be buy now, pay later. It's cheap. That sort of thing. That's as simple as it could be. We saw that in the dot-com boom in the late 90s, 99, where companies just changed their name, put .com at the end of it, and they multi-bagged from there. It's simple as it is. So the next company is Spector. Ticker code is SP3. Again, I don't know a lot about this company, so if I'm on the verge of buying a company, I will do way more research on them just to get more of an idea of what they do. I do know I did like their Facebook page, and I did see what they do. They do Facebook posts about putting up, I think it is these posts of monitoring stuff. So they do monitor like construction sites to keep away or thieves or something, that sort of thing. So that's one of the things they do, I think. At the moment, so the one things I do monitor is, because I'm a number person initially, is just looking at the cash receipts. And we did see some good growth from October 17 to July 19, but we've seen that growth in cash receipts just level off over the past year or so. Is this going to be a terminal thing, or is this just a little blip on their radar? So I think we'll find out in the next two reporting seasons. So this reporting season and then January 21, we'll see if this is just a blip. Could be a COVID-19 thing too. But fairly cheap, this company, so only $98 million shares on issue. They did do a capital raising. So initially I was going to put in shares on issue like 70 million, but they do a capital raising after the annual report, which did increase their shares on issue a little bit. But a share price 6.2 cents. They've only got a market cap of $6.1 billion. When you think of they're bringing in already $4.8 million in revenue, and they're almost cash flow positive. In fact, if we look at the last quarter, they're literally almost cash flow positive. This is fairly cheap, especially if they start growing those cash receipts, start getting more cash flow positive. This could be a multi-bagger from here, without doubt. I said previously, not much doing with the share price. It's complete opposite of Eccentric. So even though the numbers are a little bit better here, cash flow positive by 116,000. If you don't take into account government grants and tax incentives, I do. So if you take that away, they are slightly cash flow negative. But the other thing is that I look at technicals and fundamentals, so I combine them too. So the chart it's been just a downtrend over the last few years, so I haven't got it here, but it did get to a price of 40 cents a few years ago, and it's been a gentle downtrend since, as low as almost 4 cents, and it's sort of been leveling off at 6 cents the last few months. One of the things I do look for is a sort of a converging of the moving averages. That's usually a good either bullish sign or bearish sign, depending on the next movement. But we've also seen an increase in volume. I like to see that also. So there are some positive signs here that if they can get some good news in the financials, this could be a bullish sign, especially if we get a little bit of a spike in volume. Take the share price to 8 cents on no sell, very weak selling. That could be a very bullish sign. If, say, we get cash flow positive in the operating activities of 1 million, that would be potentially a good time to buy. So the last company, Connection, a little bit different than Spector in terms of shares on issue, 863 million shares on issue. Market cap of only 12.1, but look at their cash flow. So this is a year cash flow of 1.5 million. So when you look at cash flow compared to the market cap, that's trading at less than 10 times cash flow. That's actually quite attractive. It's something like 8 times cash flow. that's actually very attractive for a potentially quickly growing company. So this company is into SaaS, so that should be a trigger for some people. SaaS. It seems like they only have one customer, General Motors. And I'm pretty sure they provide their courtesy transport program. I'm pretty sure that has to do with loans or rentals that General Motors give their customers. Maybe they're getting the car fixed or something. Again, I'm not over with what this company does to an actual fact. But in the past, they did something a little bit different. I did hear about this company about 6 years ago, and they were doing something subtly different than what they're doing now. And you can see in the cash receipts on the bottom graph there, not much happening for many years until January, April, July last year, when we just saw good growth. It's probably when they changed their business model, doing something different. Maybe they had some new management, trying something new, develop this relationship with General Motors, that sort of thing. Or maybe that's when the relationship with General Motors kicked in. And I'll show you the graph in the second, or the chart in the second, and that's when the share price started to kick up too. So financials look pretty good. If they can keep that sort of cash flow going, this is cheap. The question is, can they keep it going? But there are a couple of concerns. Well, really only one concern. And I'll get to that to the next slide after this. So as I mentioned before, around January, July last year is when, why is it doing that? Around January, July last year is when we saw an increase in the share price, and that sort of corresponded to the increase in the financials, increase in the share, in the cash receipts. Last few months, we've seen a massive increase in volume, actually, and I'll get to that in the next slide. And we've seen that to correspond to actually a decrease in price. We saw a massive spike in share price on the release of the annual report, and the result of the annual report just showed that they were cash flow positive 1.5 million, etc., etc. Previous cash flow report, well, that could have been the cash flow. So the annual report they released, or it was this cash flow report. If you look at this cash flow report, it was cash flow positive 1.1 million. And I can see why that might have been a big spike in share price when the market saw that. $1.1 million in one quarter, that corresponds to $4.4 million in a year. You can't translate that, but some people would. And that would have got the market very excited at all. So in fact, the next slide I can see, no, it was the release of the annual report because that was done in August. Doesn't look like the release of the cash flow report did much in the end of July. So it was all the annual report. And we can see the annual report was released on, looks like the 21st of August. There was a massive amount of volume, 21st, 24th, and 25th. Remember I said there was 850 million shares on issue, yet over those 3 days, a massive amount of volume came in. In fact, on the 24th of August, 493 million shares were traded on that day, which represents more than half on the shares on issue. So maybe day traders got a hold of it and made it its plaything for a day or so. Share price went up 42% on the 21st of August, and it's been in a downtrend since. In fact, the share price now is lower than it was before the release of the annual report. That's weird for me. Why would you be selling when the share price is lower than it was before that positive news of the annual report? Unless you're a day trader and you bought in at the high and now you're selling at a massive loss. And I think maybe you should give up your day trade or day gig if you're doing that. They did release some news on Friday, the 2nd of October. So the overall market was down a fair bit because Donald Trump getting COVID-19. But the Connection also did release, if I remember correctly, I think it was the resignation of one of the directors. And sometimes a resignation of director, the market can perceive that as bad news, especially if it was sudden. I do believe it could have been sudden, or immediate. So straight from now, he's resigned. He does have a fair few shares on issue too, so whether he sells those shares or not over the next few weeks, I'm not sure if there's any restrictions on him selling that. So anyway, Connection's looking quite cheap at these levels, so I might potentially, on Monday, put a little bit of a bid in there, because this could go up fairly well if the next cash flow report's quite positive. And we saw it go up to 37 cents on the annual report. So that's potentially a double bagger or double bagger and a half. So I'm might put in some money in this, maybe. We'll see. So that's all for part 2. Part 3, I'll feature 3 little bit bigger companies: Quickstep, 5G Networks, and I'm going to mispronounce this name, Alcidian. So if I do mispronounce some words here, make sure you leave it in the comments. I'm not the best pronunciation of names. I did say on radio once Ravenshoe, when the right name is Ravenshoe. Anyway, that's off topic. So I'll be doing those 3 companies. I actually was a 5G Networks holder at one point and very nearly became a Quickstep shareholder. So these 3 companies, a little bit different sectors: healthcare, Quickstep's in sort of manufacturing, defensive stocks or defensive stuff, and 5G Networks, I believe they're also into data centers and that sort of thing, which is a bit of a growth center or growth story. So I hope you join me for the next episode, and that's all for today. See you later.